There's such a fine line, making money and losing money in the market.
We want to teach you the concepts.
You have to be okay with the type of trader that you are.
We want to teach you the processes.
This is what really gives the meat and potatoes to it.
We want to teach you how to.
The bottom line is you want to make money trading.
I can promise you that I can make you a better trader.
Join T3 Live at the Boca Raton Hotel and Resort April 26th and 27th for an exclusive trading education event. Sign up now.
Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the daily recap. So today for the broader markets, it was a somewhat quiet day. We gapped down and got some weakness early in the morning, but then in the afternoon we sort of floated higher and paired a lot of those losses. And when it was all said and done, we ended up with very small losses in the indices. The Dow was basically flat. The S&P was down something like 0.25%, but nothing really to speak of today, nothing noteworthy as the broader indices go. But the big story, obviously, if you were paying attention to the market today, was the precious metals. You saw gold and silver absolutely get taken to the woodshed, beaten up, whatever words you want to use to describe it, but huge sell-off in those metals after they had been somewhat quiet, relatively speaking, over the last few weeks and even months. But I talked about previously about how for those stocks, and we'll get, or those ETFs, we'll get into them in a second and actually look at the charts, but about how macro support should be treated as macro support until proven otherwise. And this morning we came in and gold was gapped down huge, and Scott Redler sent out a morning note to his email list, and we also put a chart on Twitter, on his Twitter, highlighting that key macro support level in gold and basically see how it acts in the morning as evidence of whether or not it's going to get a definitive break below there, or whether it can rally and some say face a little bit. And obviously this first scenario took place where you really saw aggressive selling in gold that makes you think, and silver, that makes you think that some funds and some big players are unloading huge positions in gold. But we'll start by taking a look at the spiders. And like I talked about, it was a quiet day. We got some early weakness that was paired into the close, and nothing really to talk about, to be honest with you, in the broader markets today, as we're still above the 8 and 21-day moving average. The trend remains very much to the upside. The market is very bullish right now. That swift snapback from Friday's jobs report gap down makes it so I think we need some rest right now after a very strong multi-day move. But it'll be interesting to see next week what kind of action we get. And we'll go ahead and take a look at that chart of gold like I talked about. This morning we came in, it was opening below this macro support level, and we said, look to see how it treats that gap, whether it gets any sort of buying interest or anything like that, and it was the exact opposite. You saw it sort of hang around in the same area. We'll take a look at the 5-minute chart just to see that intraday action, but after it opened, as we wait for the chart to load here, we'll go to our East Coast charts. We don't look at all the 24-hour stuff. Opened this morning, sort of traded in a little range, nothing crazy, and then come around 10:15, 10:30, and you just got a huge wave of selling. Looked like panic selling, looked like the potential for funds maybe getting blown up, gold funds, or huge players, whether it be central banks or governments selling their huge positions in gold. But huge volume. We'll go back and look at the volume on the daily chart. And the last thing I'll talk about with the intraday chart is that you had another push lower into the close. You didn't get any sort of snapback after that harsh selling early, but if we go back and look at the daily chart, look at that volume today on gold. I mean, you have to zoom way back to get any type of volume that even approaches that on the GLD. The last time we had a volume day like that in the GLD was all the way back here last August when it was at highs. And I guess you get a lot of volume at key inflection points, and when a stock is putting in a high or an ETF is putting in a high, you often get a capitulation type volume. And then today, when you break a key macro support level, that's also when you can see a lot of stops run and things like that, and that's what we saw today. Gold, the GLD finished today down 4.7%, which is a huge day for gold in either direction. I mean, it's not typically that volatile, but we posted some charts on StockTwits looking at macro support levels now in GLD after this macro support level had broken. And if you zoom out to the weekly, you can see the 200 period moving average here around 139.85. We'll call it 140. And that 140 level also coincides with the most recent or one of the most recent breakout levels in gold, which was back in the beginning of 2011. So in my mind, the 140 level is definitely a natural target for gold now that it's broken this upper level support range, and we'll be watching that 140 level to see if it gets tested and see how the GLD reacts if it does get down there. We'll also take a look at silver. Now, silver was down even bigger on a percentage basis today. If we look at the daily chart, silver was down about 5.32%. It didn't have as clean of a pattern as GLD did in terms of that macro support level, but you saw huge selling after it was able to perk up with the market over the last week or so. We'll look at the weekly chart in the SLV. You do see it breaking below a pivot here, breaking below its 200 period moving average. So you could say technically it's even weaker than the GLD because it's breaking below that 200 period moving average, but they always trade in concert or generally trade fairly close to each other. So if you're going to trade one, maybe trade it, not the other. But similar type of action in silver and gold today. You look at the banks. We'll take a look at the XLF first. You had bank earnings start for this season this morning with Wells Fargo and JP Morgan. Decent reports when you look at the revenue and the EPS numbers for JP Morgan and Wells Fargo, but the reports weren't enough to push the stocks higher, and they both gapped down. But you actually look at the XLF, and you see some nice action intraday today, or this is the weekly, I'm sorry. You look at the daily chart of the XLF. Things didn't really fall apart on those gap downs for Wells Fargo and JP Morgan. And if you do look at that weekly chart, you see a nice move this week after they were extremely weak on that Friday jobs report number, but breaking back near above pivot highs is the XLF. We'll take a look at the JP Morgan chart. Go back to the daily on that. On today's gap down, it ended up only with small losses. It had a decent travel range, but still above its 8 and 20 window moving average and its 50-day moving average. So this is something I think nothing really to take note of today in JP Morgan. It shrugged off that earnings report that was initially looked like it was going to be a little bit bearish, but JP Morgan hiked its dividend by 27%. They announced a share buyback program and a lot of really good things in that report. So it'll be interesting to see if investors analyze it a little bit more and digest it more and actually view it as a reason to buy JP Morgan in this area. But Wells Fargo, another one that's a nice value play in the banking sector. It was weaker. It had not as strong as a report this morning as JP Morgan. It tested this pivot floor that I highlighted this morning in Wells Fargo, but it bounced off of it and was able to close back above its 21-day moving average and is still above its 50-day. So I think Wells Fargo did a good job of also shrugging off its earnings report. It wasn't a bad report, but it initially looked like some people were looking to sell the numbers that Wells Fargo came out with. And then you look at Goldman Sachs. It reports early next week. It held up well on those reports from Wells and JP. So obviously you have to wait for the report to get more information about possibly the next leg in Goldman Sachs. We'll take a look at Apple today, which continued to be weak. Apple looked like it wanted to get another multi-day push, but as we've seen with Apple over the last 6 or 7 months is that any multi-day push seems to be met with selling. And today we had another situation like that. Apple was down over 1% in a market that wasn't, the NASDAQ was only down less than 0.5%. So continue to see relative weakness from Apple, and it's below all of its moving averages, below its 8-day now, below its 21-day, 50, obviously 200 is way above it. But this continues to be one that's out of play. If you're going to look on one side of it, I think the short side seems better at this point, but it also is very oversold on a multi-month basis. So I think in general, Apple's out of play, and I think you should focus elsewhere in your trading. We talked a lot about how money's been rotating through this market, and one thing I didn't get a chance to touch on this morning in the morning call was some strength we're seeing in the automakers. You look at Ford. This is a sector that hasn't really perked up the way a lot of others have, but if you look at the chart of Ford, you see a really nice stealth rally this week in Ford. Today it gapped down and saw some weakness early, but was able to pair those losses and close only narrowly negative, and it's breaking above a pivot here that I think now that it's above it, if it can get some consolidation above this area, I think you could see a move back up to these pivot highs from January. The pivot high here is 1430. So another area that you could see money continue to rotate in is people are looking for places to put their money in the equity markets that haven't completely run away from them. And people don't want to chase strength, but they want to be involved in the stock market. So you'll continue to see money rotate, I think. And you look at General Motors, similar type situation as Ford. Really nice 2-day move Wednesday and Thursday. today was pretty much quiet and a quiet day in the market, but it also, I think, could get back up to pivot highs from January as it's now above all of its moving averages. You saw some other weak and select tech names, like you saw IBM gap down big today. I think it was downgraded, but it was able to pair some of those losses after some early weakness, and now it's above its 21-day, sort of right coming back into its 8-day. So it'll be interesting to see whether IBM can break out of this sort of mini downtrend. You did see a lower high in IBM that could suggest, if you wanted to make the case that you could short it back up into this trend line, we'll see if you're looking for short ideas in this market. But on a macro sense, IBM is extremely strong, and this is definitely not in the A range or even B range from a short setup, but just something to take note of. And I think generally speaking, you continue to see money rotate into the defensive names. Procter & Gamble today in a down market was higher. It closed off its highs but was still up for the day. Very good action in that stock. You saw Johnson & Johnson also be strong today, another value staple. And then StarBucks is one we talked about this morning, is one of those strong brand names that looked like it had a really nice pattern. It looked like it wanted to break out of it with a lot of momentum early in the session, but in a quiet market on a Friday, you saw some weakness come in the afternoon, and StarBucks closed well off its highs, but still looks good for higher prices if the market cooperates. But that'll do it for today's daily recap. I think the big thing to take out of today was that action we saw in gold and silver. It'll be very interesting to see whether you see dip buyers come into those precious metals next week, or whether this is the start of a bigger downfall for those precious metals that were so in vogue for almost a decade there in the early 2000s, all the way up until about 2011 when you saw a top in gold. But traders will be watching that very closely next week, and it'll be interesting to watch. But this is John Darsie for your daily recap, and we'll see you back here on Monday.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.